Good day, everyone. Today we are doing a deep dive on HOOD, my third largest holding in the portfolio, next to PLTR and NVDA. What if your brokerage launched its own blockchain, introduced stock tokens, and let AI agents trade crypto for you with custom guardrails? Robinhood did exactly that on July 1st. The stock climbed several percent on the news. Is this the evolution that turns Hood into a global fintech powerhouse, or just flashy features on a business still tied to volatile trading volumes? In this video, we cut through the noise. We lay out the bull case built on profitability, diversification, and real product innovation. We examine the bear case centered on cyclical revenues, competition, and regulatory risk. We break down the latest catalysts, including the July 1st London announcements and what they mean for the stock, trading near $113. Robinhood delivered record results in 2025, with $4.47 billion in revenue and nearly $2 billion in net income. Q1 2026 added $346 million in profits on $1.07 billion revenue. Analysts mostly rated a buy, with average price targets around $118 to $120. Let's get into both sides. Robinhood has built a highly scalable and profitable machine. Full year 2025 revenue reached $4.47 billion, with nearly $2 billion in net income. Q1 2026 delivered another $346 million in net income. Profit margins after expenses stay very strong. That means the company keeps a huge chunk of every extra dollar it brings in as bottom line profit. Diversification is already working. In Q1, crypto transaction revenue fell 47% to $134 million amid softer market conditions. Total revenue still grew 15% year over year because other categories more than offset the decline. Prediction markets and event contracts revenue surged 320%. Equities revenue jumped 46%. Options revenue grew 8%. The platform adapts when one asset class slows. The July 1st product announcements supercharged the growth story. Agentic trading for crypto lets eligible users connect their preferred AI models directly to Robinhood data and execution. Users set capital allocation and safety guardrails, while the agent scans millions of data points and acts in real time. This brings institutional-grade tools to retail without proportional headcount or cost increases. Robinhood Chain mainnet and stock tokens open tokenized equities that can trade nearly 24/7 and plug into DeFi protocols for lending or composability. These are not side projects. They expand the total addressable market from U.S. retail brokerage into global on-chain finance and AI-augmented trading. International expansion multiplies the opportunity. The recent acquisition of WonderFi gave Robinhood full entry into Canada. Perpetual futures are expanding across Europe. Crypto trading is planned for the United Kingdom. Robinhood Gold now has 4.3 million subscribers, generating growing subscription revenue of $50 million in Q1 alone, up 32%. Net deposits reached $18 billion in the quarter. Bulls see a company with proven high incremental profits, a track record of pivoting revenue streams, and a product roadmap that directly attacks new markets. At current levels, with most analysts still bullish, the setup offers asymmetric upside for investors who can handle volatility over a 2 to 3 year horizon. The bear case begins with revenue cyclicality that Q1 2026 made obvious. Crypto transaction revenue dropped 47%. Even though prediction markets filled the gap, those revenues can prove lumpy or face regulatory scrutiny as they resemble event betting. Trading volumes in options and equities also swing with market sentiment and volatility. Robinhood still derives the majority of revenue from transaction activity rather than stable, fee-based businesses. Competition remains intense. Legacy brokers like Charles Schwab and Fidelity have deeper research, integrated banking, and decades of customer trust. Webull and newer apps continue aggressive feature and promotion battles. Robinhood must keep spending on product development and user acquisition just to defend share. Regulatory and compliance risks are real and growing. Crypto assets, tokenized products, and a proprietary blockchain invite ongoing SEC oversight, plus different rules in every international market. Launching agentic trading and DeFi adjacent features adds new layers of regulatory complexity around AI decision-making, custody, and consumer protection. International expansion is slow and expensive when licensing, data rules, and local partnerships are required in each country. Valuation offers little margin of safety, and a market capitalization above $100 billion on roughly $1.4 billion of trailing annual profits. The stock trades at a rich multiple. Any sustained slowdown in user growth, trading volumes, or new product adoption could trigger sharp multiple compression. User economics add another concern. Many customers concentrate in high-risk options and crypto strategies. Losses can drive rapid churn or reputational damage. Acquiring and keeping engaged traders requires continuous marketing and feature investment that can pressure margins over time. Macro conditions matter more than management sometimes admits. Higher rates, economic uncertainty, or a prolonged crypto bear market reduce speculative retail participation across the platform. Bears view Hood as a well-run but ultimately cyclical business in a competitive industry with material execution and regulatory overhangs that justify smaller position sizes or waiting for clearer proof of sustained, non-cyclical growth. The most important recent catalyst landed on July 1st, 2026. During a London event, Robinhood laid out an aggressive global and crypto expansion plan. The company launched the mainnet of Robinhood Chain, its Layer 2 blockchain. It introduced stock tokens that bring traditional equities on-chain for potential 24/7 trading and composability with DeFi protocols. Agentic trading was extended to crypto, allowing eligible U.S. users to connect external AI models that continuously scan markets and execute strategies while humans retain full control over capital allocation and safety parameters. The company also broadened perpetual futures offerings across additional European markets and signaled plans to launch crypto trading in the United Kingdom. These moves build directly on the earlier WonderFi acquisition that opened Canada and ongoing work toward a Singapore presence. The market responded positively. Shares rose several percent in the sessions following the announcements as investors priced in the scope of the new initiatives. This was not a minor feature update. It marked a clear strategic shift from pure U.S. retail brokerage toward owning more of the financial infrastructure stack, including on-chain settlement, tokenized assets, and AI-driven execution. These developments directly engage several bear arguments. The Q1 results already demonstrated revenue resilience when crypto volumes fell. Prediction markets and equities growth more than compensated. The new agentic and blockchain tools give management additional levers to drive engagement and new revenue categories that are less purely dependent on spot crypto prices. Tokenization and DeFi integrations expand the addressable market beyond traditional trading commissions. Context from the most recent quarter matters. Even with the crypto revenue decline, overall results beat expectations on the strength of newer products. Q2 earnings expected July 28th will show whether that momentum carried forward amid any crypto market recovery. Near term, the stock could stay range-bound or volatile ahead of earnings. Longer term, the July 1st roadmap gives credible paths to higher user engagement, international scale, and diversified revenue. Investors who believe management can execute on these initiatives see the recent announcements as meaningful de-risking of the growth story. Putting the pieces together, Robinhood has genuine momentum. Profitability is established. Q1 proved the platform can diversify revenue when crypto cools. The July 1st announcements on Robinhood Chain, stock tokens, and agentic trading represent real product innovation that expands the opportunity set into global on-chain finance and AI-augmented trading. The bear concerns around cyclical volumes, competition, and regulatory risk are legitimate and mean the stock will stay volatile. Valuation is full, so execution must continue to deliver. My stance is that the bull case is stronger for investors with a multi-year horizon and appropriate position sizing. The company is transitioning from a US-centric trading app into a broader fintech infrastructure player. If agentic tools and tokenized products gain meaningful adoption, the upside from current levels is substantial. If this breakdown helped you understand the setup on Hood, hit subscribe and turn on the notification bell for more in-depth stock analysis. Drop your take on Robinhood or any questions in the comments. I read every one. Links to the earnings releases and July 1st announcements are in the description. This video is for educational and entertainment purposes only and is not financial advice. Always do your own research. Past performance does not guarantee future results. Consult a qualified financial advisor before making any investment decisions. Thanks for watching, and I will see you in the next one.